Welcome to the Passive Income Podcast. I'm your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode. Joining me is Kevin. You can find him on X, the app formerly known as Twitter, at Walk You to Wealth. Kevin, please go ahead and give yourself an introduction.
Sure. First, Dave, thank you for having me. So I appreciate the invite. Looking forward to sort of spending some time with you. In terms of the intro, and we can go sort of as deep, I tend to be an open book. So we can go as deep or as high level as you want, but
Yeah,
short
open that book
story.
right up and let's dive in.
Let's do it. Grew up originally from New York. So grew up just outside of Manhattan in Queens, New York, actually in Flushing, Queens, where the US Open tennis tournament just was.
Right.
So grew up in Queens. Big Jets fan, so was devastated by the football injury last night, though if the Jets were finally going to make a turn, but same old Jets. I've been in Massachusetts now for the last close to 20 years. I keep saying I'm a New Yorker. My wife keeps correcting me and says I'm no longer a New Yorker. I spent about 15 years at Fidelity Investments, where I eventually was a vice president of risk management. And from Fidelity, I had a chance to join Coinbase, so a cryptocurrency exchange, if you don't know Coinbase. And I was the head of risk at Coinbase for about 2 years. And now I'm sort of running my own business and doing my own thing with Walk You to Wealth. And it's been great. It's different. Every day is a little bit different than the day before, but so far so good.
Okay, let's dive into that for a second. What did you say? Risk something and cryptocurrency and Coinbase.
Yes, so
Is
I was the head of risk for Coinbase.
isn't all cryptocurrency risk?
Yeah, so I was the head of the enterprise risk function, so almost the business side of Coinbase. So how do you protect the enterprise, right? And so part of that is obviously also protecting any customers. All of crypto is risk. I mean, all of investing is risk, right? To some extent, it's
Sure.
choosing what works for you, right? Whether it's dividends, in your case, Dave, or real estate or crypto, right? You're always choosing, what's the amount of
What's
risk you're willing to
your
take.
own personal risk
Exactly.
tolerance?
Yeah. So I was doing that at a company level, both at Fidelity and also at Coinbase.
Yeah, wow, that's amazing. And correct me if I'm wrong, but Coinbase trades on the New York Stock Exchange. It's a
Yes. Yeah. Publicly traded. Yep. Coin ticker symbol.
wow. Yeah, because obviously in the last I guess 3 years now, crypto has had quite the run up and down. There was that huge I call it the crypto craze of 2021. The pandemic hit and everybody was looking for ways to make money. Bitcoin was skyrocketing and people were making money hand over fist. And for people that don't know cryptocurrency, basically everything in crypto follows Bitcoin, right? I think you would probably agree with me there.
It,
And so, yeah, there was a lot of excitement in 2021 with, like I said, the crypto craze. And then came sort of late 2022 with sort of the Bitcoin crash, and the rest of the cryptos followed followed that, and the prices tanked. So yeah, crypto is a very crazy world to dive into for sure.
yeah. It was an interesting experience from a standpoint of so being at Fidelity, more traditional financial services, right? But Fidelity was also sort of dipping their toes into the crypto waters when I was there, and they actually have their own crypto sort of business within Fidelity now that they've rolled out. And so it was fascinating to sort of see Fidelity's approach and then to go over and join Coinbase, which obviously is a different animal altogether. So
Yeah,
more of that startup mentality. And to your point, Dave, about the sort of the highs and lows, I had joined Coinbase almost at the peak. I mean, if you charted my day one, it's probably the peak of all of crypto. And it was,
Bitcoin's at 69 grand,
68,
and everybody is
69,000. Yes.
happy.
Yeah.
Like
Yeah.
yeah,
Yeah. And it was going to hit 1 million by the end of the year. That was sort of the mentality. And then to your point, yeah, I mean, it's like any other market. It's certainly every market's unique, right? But every market has their ups and downs. And then it sort of was in a free fall to, I think, I want to say 13,000, give or take, Bitcoin. And now, back up in the 25, 26s for the last little bit. But yeah, it was
yeah,
definitely a wild ride. There are a lot of interesting use cases in the crypto world that
for sure.
don't get as much fanfare, if you will, as Bitcoin and Ethereum. But there's Yeah, there's a lot of interesting use cases. There's also a lot of the same with any investment. There's a lot of scams. There's a lot of questionable activity, right? And so you always want to be
Yeah.
cautious what you're investing in. But the underlying technology, the blockchain is interesting and fascinating. And I think more and more, that's where assets are going to be traded. They're going to be tokenized, and people are going to trade 24/7. That's where I think, whether it's stocks, bonds, real estate. I mean, I think we move to a point of 24/7 markets at some point.
Wow, that's an interesting take. An interesting take that, the New York Stock Exchange, the Nasdaq, or here in Canada, the TSX Toronto Stock Exchange could be on that 24/7 clock, which obviously crypto has been ever since its inception. But that's that's an interesting thought for sure.
And if you when you dig into it, there are more and more sort of use cases, or whether it's gold or other assets and more and more traditional financial service companies, with JP Morgan, Fidelity, right? Like huge players in the space that are getting more and more involved, whether it's in crypto itself or in the underlying sort of blockchain technology.
Yeah.
With the notion that it'll be, quicker, faster, potentially cheaper for folks to transact. And once you do that, again, it opens up this potential window where you could trade 24/7. It doesn't mean they'll allow it, doesn't mean they'll move to it, but I think that's what will happen eventually.
Yeah, my big thing with block blockchain technology, like you mentioned, is the ability to move funds quickly all around the world, right? I can send a transfer from here in Canada to Australia or Japan or Belgium or name a country in literally, a few seconds, 40, 30 to 60 seconds. Whereas with a bank transfer to do that exact same payment could take days, could take up to a week, right?
Yeah, and to your point, David, the time piece of it is huge, right? That usually the expense associated with it, right, is sometimes significant, especially if you think about sort of like Western Union and those type of transfers, right? If you're transferring money to
Yeah.
family and friends. And then I think, the more I dug into it before I joined Coinbase, and by we I mean those of us in sort of developed countries, right? Canada, the US, right? We take for granted what we have here, right? Where there's an ATM on every other block where you can go and get
Yeah.
money, right? Around the world, it's just not the case, right? So in this case, to your point, you have a phone, and you don't necessarily need to be near a bank or near a location or near an ATM, right? Folks can get money in real time, and so it does change things a bit if they, again, there's a lot that has to play out and that it needs to be figured out, but it's definitely it's interesting technology.
Before we move on from crypto and blockchain technology and Bitcoin, I do just want to get, because we've talked about, developing countries or Canada and the US being developed countries, like we're first world countries, obviously. I mentioned a few other countries, Australia, Japan, Belgium, but I just kind of want to get your take on El Salvador and what they've done with Bitcoin in the last few years,
Yeah,
and mining Bitcoin from volcanoes.
yeah, it's funny. I would say my take is I don't have a strong take, because every article, and this is the case with most. I mean, a lot of financial articles, but especially in the crypto space, every article sort of has such a heavy tilt and spin. You could read 1,000 articles that tell you how great the experiment has been, right? And those generally are from crypto centric sites. And then you could read,
Yeah,
a
the
thousand a
maxis,
thousand
right?
articles about the disaster that it's been. So I think it's, anytime someone's willing to sort of take the chance and give it a shot, I think it makes sense, especially when you think about, some of these, especially developing nations have gone through. So when we talk about inflation here, right, and everyone in the U.S. has been complaining about inflation. I'm not minimizing the 5-6% that we've been going through. I mean, you're talking about, thousands in some cases percentage, right, in some of these developing countries that they've been through. So if you can get to something that's not tied to the government, right, that's sort of its own entity, if you will, and that's a lot of what, not every crypto, right, every crypto is a little bit different, but that's certainly Bitcoin's place, right? It's outside of sort of the government entities. No one's creating more, et cetera. So there's a place for it. It's a matter of just what's that place, right? So far, it hasn't found its place from a transaction perspective. Going out and buying your Starbucks coffee or whatever you're drinking, right, or your Tim Hortons, and going
Yeah.
out, no one's paying in Bitcoin. Part of that
Yeah,
is
when the cashier says, "How would you like to pay?" They want you to say, like, Visa, debit,
Yes, yes,
cash.
yes.
They don't expect you, "Oh, I wanna pay by
Yeah,
Bitcoin."
absolutely. Yeah.
We're not there
So
yet.
one, we're not there yet, and two, because to your point, the run up, right? Who wants to spend, $10 on coffee on an asset, if you will, or spend an asset that next week could triple or quadruple in price, right? So that it's been so, I don't want to say unstable, right? But it's been a bit all over the place. So that
Yeah,
changes it a bit from, you think about it more like in sort of a commodity, if you will, and less like cash. But
yeah.
again, there are fascinating use cases. There's one, and then we can get off the crypto top. I wasn't expecting to talk about crypto. Uh,
Neither was I, to be honest, but I'm okay with it.
but
Hopefully, all the listeners are clicking off. They're like, "What? We're talking about why are we
yeah,
talking
this
about
isn't where
crypto?
I
This
spent
is the
most of my
passive
time.
income podcast."
But there's I'll throw out one sort of interesting one, just to give folks sort of a flavor for what else is out there, right? Because you hear about Bitcoin, you hear about Ethereum. There's a company a company and a coin called Audius. And the idea behind Audius is essentially like your Spotify, your Apple Music, right? All these different streaming services, but almost the artists are directly compensated by the listeners through the coin, right? So you think about it like that, and that's, to me, it's use cases like that. Now, maybe it'll work, right? And maybe ultimately they become the next sort of Spotify. Maybe it doesn't,
Mhm.
but it's an interesting sort of model to try to disrupt some of these traditional players, and that's what I find interesting.
I'm gonna just give one final thought
Yeah,
there on Bitcoin and El Salvador. The president, sorry, his name's slipping my mind right now, but he was buying all this Bitcoin, and you were mentioning how it's separate from the government, which it technically is, but the government of El Salvador is buying all this Bitcoin when it was like 50, 60 grand, 40, 45 grand, and now it's trading, like you said, in that somewhere around 25 to 30 range. And so I don't know, is there a lot of hate on him right now in El Salvador? I honestly, I'm not, I don't know, because I haven't kept up with it in the last few months. Um, Anyways, sorry, that's my final thought on cryptocurrency and Bitcoin. And I'm sorry we got sidetracked there, but I'm kind of glad we did, because it was a fun little segue or sidetrack. Um, I do want to get into, I guess, walk you to wealth and how that got started, where you're going with that, and sort of everything around um, that entity of the walk you to wealth.
yeah. So Walk You to Wealth started as a book, and so it's a book that's available sort of Amazon, Barnes and Noble, sort of wherever you buy your books. And that was the idea was, I'm a certified financial planner, from a background perspective, and I became a CFP just to learn, right? I wanted to understand the ins and outs of investing and assets, and I didn't know ultimately how I was going to use that knowledge, right? But I just wanted to learn. And so Walk You to Wealth became a book that's, the intent is to just simplify this world, right? The world of investing and personal finance can be as complicated, and as jargon heavy. I always joke I'm sort of jargon allergic, right? I mean, I hate financial jargon, and it can be as simple as you want it to be, right? And I didn't know if there was a spot for that, right? For just like, here's this simplified. Like, if I were starting over, here's how I would explain it. In some cases, even in the book, I talk about how I explain things to my kids, right? Because I want my kids to understand. And
Yeah,
so that's what it was all about. It was about a book that I wanted to put out there to just help people learn and sort of figure out how to navigate the world. There's so much bad advice out there, as well, right? I mean, X is a good example of that, but there's no shortage of that. And so here's a spot where, you can learn not only what I've learned, but also learn from my mistakes, right? No one's perfect. I made mistakes, and I share some of those, in the book. And then from the book, it became, how else can I help people? Right. And that's what this is about. Sometimes I think financial planning, um, is difficult for folks to, sort of address or get
grasp.
help. Yeah. Yeah. I think folks are nervous. I think, someone that I connect with closely on Twitter, Dividend Roots. I'll give Dividend Roots a shout out. I think he described it as, he met with someone, I can't remember the firm, and he said they were slimy. And I think sometimes there's that sort of negative connotation, and that's a shame, because I think there's a lot of folks. I mean, there's no shortage of stats, right? 60% of folks living paycheck to paycheck, $1 trillion in credit card debt in the U.S. I mean, there's no shortage
Yeah,
of terrible financial statistics, that folks could use professional help. But sometimes I think it's difficult. I think sometimes it's not approachable. I'm different. I think what I do is different. I think the way I operate is different. I'm not a salesman. I'm not really selling anything. I'm sort of selling folks on learning and learning about personal finance. I just had a potential client call right before this, and I told her I stress the learning side. I think a lot of this is like learning how to read, right? If you know how to read, it pays dividends the rest of your life, right? You can then drive, you can order from a menu, you can do all these things. If you learn how to invest, how to save, it pays dividends the rest of your life. And that's what Walking Wealth's all about.
Yeah, so I've got 2 thoughts there. First, I used to live paycheck to paycheck, now I live direct deposit to direct deposit.
That's a good
That's just
step
a
in the right
bad
direction.
Yeah, that's just a bad joke. And then sort of my other thought there as you were kind of explaining, this keeping it simplified, and all I was thinking is sort of the KISS strategy, the KISS, just keep it simple, stupid, right? Like, just keep it simple, so and it sounds like that's what you're really trying to do, uh, with your helping of other people. Just keep it as simple as possible. Don't overcomplicate it. Just make it so people can understand whether they have a grade 9 education or or a doctorate degree. Because there's the other thing too, right? People that they might have a PhD in something, but still know absolutely zero, nothing about finances and investing. And those people are the dangerous people because they're potentially making a lot of money and not, and have no clue what to do with it, right?
Yeah, Dave, to your point, 100% right, right. So this is the situation that I think people find themselves in, right? Whether it's whatever age, right? You want to pick late 20s, early 30s, early 40s, but you get to this certain stage in life, right, where you're a quote unquote adult, and there are things that you're just
I'll get there soon. I'm 50 years old, and I'm hoping that soon my mom calls me an adult.
and you get to this age, right? And there are things you're just almost expected to know, right? And part of that is, I think, personal finance, right? But to your point,
No one's ever
no
taught
one
it. You're
taught
just
you.
expected
Yeah,
to
and
know it.
that's the struggle. I mean, even today in the United States, I believe it's 17 states now that require some sort of personal finance class in high school before you graduate, right? So 17
Oh,
certainly
that's
better than none, right? When I went to high school, but
yeah,
it just
that's
we're not moving
34% if
fast.
my math is close.
Yeah, we're just not moving fast enough, right? And even those classes, like I don't know how how good are they,
In
how
depth.
relevant are they? Yeah, especially when you're in a high school versus I think when you're post college, I think it's probably the right. There's no bad time to start, right? But post college, it's more real for you. You're working your first job, you're getting your first paycheck, and what do you do? So yeah, you're expected to know it, but you were never taught it, right? And that's
Yeah.
where it's sort of at any age, whether it's my target, I'll say demo from a client perspective is generally in that sort of 20s to 40s, right? Because there's so much going on in that time frame. I'm just outside that range myself, whether it's personal decisions like getting married, buying houses, kids, etc. Different jobs that you may be going through. So that's my term. I have folks though that reach out to me. They're in their 50s and 60s and 70s, right? And they want to learn and want to figure it out. And it's never
Yeah.
too late to start. But yeah, it is tough because again, you're just supposed to know it now. And now you're an adult, you're supposed to know how to do this, and no one ever taught you.
I would say those high school kids are very lucky, even if the courses are not at all in depth or anything. At least giving that introduction and maybe just learning some of the basic terminology, maybe just laying some of the groundwork so that later in life, when they get to that stage after college, when they get their first, real full time job where you're not working a part time job after school, and you get to that point where you actually now some of these different, words and terms and things that could come up in that personal finance journey.
Absolutely. I mean, if there's everyone has their financial regrets. I mean, I think everyone's in the same boat that they wish they knew more sooner, right? I'm certainly in
Yeah.
that boat, right? I mean, if I knew what I know at 43, and I still don't know everything, right? I'm still learning something new almost every day. Usually not from X, but yeah, elsewhere. But I'm always trying to learn something new and trying to figure more things out. But I wish I knew it at 20, what I sort of have learned by 40. And that's the gap I'm sort of trying to help folks close.
Yeah, I learned so much just by talking to people here on the Passive Income Podcast, people like yourself. We're up to episode 107, which is unreal. And so you can just imagine how many different stories, different journeys, different paths, and of different people that I've, you know, listened to and discussed, and I've just learned so much from everyone. So, for me, I'm a little bit selfish saying I love doing this because I'm learning so much from everyone, right? So,
Yeah, and congrats on the 107. And and that's to your point. That's been one of the best parts about sort of running Walk Your Wealth and running my own business is, I'm interacting with folks that I would have never interacted with in my life, right? And
right,
sort of as they're learning, as much as they're learning from me, sort of I'm learning from them about what they're doing in a way of life. I mean, everyone is just in a drastically different financial situation and a
yeah,
different personal situation in that
and that's why it's called personal finance. It's
absolutely,
not
yeah, and
it's not
yes.
called his finance or her finance. It's personal finance because it's personal to you.
Yeah, absolutely. I had a client ask me yesterday, what's the best way to do this, right? We were talking about credit cards at the time. I was like, what's the best way? And it's like, well, there's we got to figure out the best way for you, to your point, right? Because everyone's
Yeah,
different, right? Some folks are much more analytical, right? And they want the sort of the best mathematical approach, right? To whether it's paying off credit card debt or investing, et cetera. Some folks just aren't analytical at all, and some folks are also a bit more scattered. Some folks are more organized, right? So you got to figure out like what's going to actually move the needle for you, and that's
yeah.
that's a big part of what I do.
That's amazing. I love what you just said there. What's gonna move the needle for you? And I think that's a huge part of it, of identifying that individual. Again, go back to the term personal finance is personal to you, right? So, this is not a stock picking show by any means or anything, but are there any companies out there that you really like right now?
So I own not a single individual stock. I might be maybe your only guest in history, Dave, that doesn't own a single individual stock. So, and the reason I don't is, you know, I having worked at Fidelity and other companies, professionals don't do it very well. Right? Right. Professional portfolio managers, in some cases, and some are better than others, right? Like anything else. But a small percentage of portfolio managers that are doing this for a living with teams of people, because I saw it happening. And I used to meet regularly with our portfolio managers at Fidelity. And again, some were really good, and the vast majority weren't able to beat the market. So I don't pretend that I know any more than anybody else. So from a stock perspective, I'm all in on index funds, and so that's I don't think twice about it. From a cost perspective, from a maintenance perspective, a mind share perspective, right? I'm not thinking about what am I buying, selling. I mean, I haven't sold. I don't know when the last time I sold anything was. It's got to be close to a decade, because I don't think about it. And I always think about the cases like and I'm not going to say you're old, Dave, but don't take this the wrong way. But
I am. Everyone knows it.
I, but I think about like Blockbuster Video. So when I grew up, Blockbuster Video was like the go-to place, right? Blockbuster Video was a huge publicly traded company, and it was the
Yep.
Netflix of that generation, right? Of my generation growing up, and we all went to Blockbuster Video and rented our movies. Blockbuster Video, I mean, doesn't remotely exist, and they laughed Netflix out of the room, thinking they were too big to almost fail, right? And so
Yeah.
I think about cases like that, or like General Electric, or GE, which was one of the largest companies in the S&P 500, and they're almost gone. So there are companies I like, right? That like I'll use Google for example. So I mean, personally speaking, I'm a huge Google sort of user of products. So my cell phone is with Google. I use all of their sort of work products that I can. I have too many Google speakers in my house. I'm sure they're all going off now that I'm saying Google so many times. But now, so I'm all in, and my experience with all the different products and services has been terrific. Will Google be
And we don't search things on the internet, we Google
exactly,
them.
yes. Now, will we be Googling still in 10 years, 15 years? I have no idea. Right? Like that's the thing.
It
Like,
depends on how that lawsuit goes
yeah,
today
yeah. And,
goes
and
this
that's the thing,
week,
you just
right?
you just never know. Like I think sometimes, especially on X, I think there are some of these companies, right? I mean, Nvidia lately, Apple is certainly another
Yeah.
one, Google, Netflix, I put in that same bucket where it's hard for us to imagine a world without them, right? Where I can't imagine a world without Google or Apple. But when I was growing up, I couldn't imagine a world without Blockbuster. I couldn't imagine a world without America Online, right? These these were companies
Yeah.
that you couldn't
Yeah.
imagine, and they're gone. So I do not buy any individual stocks.
So index funds and
Index funds,
ETFs.
ETFs. Yeah, I always say that my general investment strategy is 90% boring and 10% fun. So the 90% that's boring are ETFs and index funds. So stocks, bonds, and then also real estate. Not index funds. I own a rental property as well. But that's the boring side, right? Stocks, bonds, real estate. And then the 10% that's fun are things that I'm just interested in. It's sort of pure alternatives. And so crypto was where my 10% generally is now, just because I spent the last 2 years at Coinbase, and you're learning. I use it as a way to learn, right? Try different investments. I mean, we live in arguably the best time to be an investor ever.
Yeah, by
It's
far.
free.
You download a
Yes,
free app on your
yes.
phone, you can trade for free, and you can buy fractional shares. You can literally start with like a
Yes, and
dollar.
then you couple everything you just said, right? And I agree 100%, right? The free trading and fractional shares, all of that, ETFs, right? You couple all of that with the fact that you think about all the other investments, all the alternatives, right? Like you can invest in fine art or wine or farmland with a couple clicks of your mouse. Like you couldn't buy
Yeah.
farmland in Nebraska with a couple clicks of your mouse 5 years ago, but that's what you could do today. So for me, I love learning about new investments. I love sort of experimenting, but I don't want to think about it for the 90% of my portfolio, right? So I keep the 90% boring, and then the 10% is like, let's try, let's experiment, and it is what it is. If you lose that money, it's sort of, I don't want to say no harm, no foul, right? But not a big deal.
Yeah, it's, that little, 10% to have some fun and play around. I would agree with you, no harm, no foul. By the way, I now have to look at farmland in Nebraska. I literally will
It's
now
super
just to see what
well,
the price of
so I'll
farmland in
give so and
Nebraska is.
I have not made this investment, but one of the companies that does it, at least here in the States, is like Acre Trader. So there's two that I'm sure there's more than two, but the two that are prominent. There's Acre Trader, where you could buy these sort of like almost fractional shares, right? So they go out and they're buying a 400 acre farm wherever it may be. In some cases, it's even outside the U.S. I think there was one in Australia not too long ago, and they're buying these farms. They're giving you, here's the expected return, et cetera, and then you're buying sort of a fractional piece of it with other, it's a crowd-funded
Right.
investment. But like again, it's something like that where maybe it's not a great investment, but I find it fascinating. And so that's where
Yeah.
I choose my 10% for things like that, that are just interesting
Yep.
and where you can learn a little bit, and then figure out, maybe that's a good investment for you, and that's where you want to put more of your money. But it's a way to dip your toes in the water.
Okay, I'm gonna say 4 letters. I'm not sure if it's an indexed fund or an ETF. You tell me. And the 4 letters, and I'm sure you probably know the 4 letters that are coming. SCHD.
Don't own it.
Okay.
Don't own it. I don't know. I also don't own VOO, which is like the X. I'll probably get banned from X for saying that.
Yeah.
So yeah, I
Yeah,
do not own VOO. So where I go from an index fund perspective are sort of two places. So VTI and VXUS. So VTI is just the total Vanguard total index fund for the US, so domestic, and then VXUS is sort of the total international fund. So from an ETF perspective, that's where I go. Mutual funds, I do sort of the equivalent. I think one of the areas where folks are typically, and I don't know about you, Dave, but folks are typically over allocated is usually your home country, right? There's a lot of this hometown bias that you see. So I'm
yeah,
the
I
yes,
definitely
and
am.
I'm the opposite of that. And so I'm the opposite of that, where I try to allocate a fair amount to the international markets. And goes back to the personal piece, right? There's no right or wrong. But for me, I like to make sure that I'm covering, I'll say all the bases, if you will, as much as you can.
Yeah.
And you look at some, whether it's like Japan when they had their market crash in the 80s, right? They're like just getting back, right? So you just never know. And again, I go back to like the blockbuster GE. Like, do I think the United States is ever going to be in that situation where we have, decades and decades of no returns? I don't, but I don't know. I'm sure the folks that were heavily 100% in Japan didn't feel that way either, right? So for me,
Yeah.
I try to keep, again, that 90% side that's boring. I'm generally 50-50 between the United States and international in terms of my stock portion of that. But I use, usually if I'm using ETFs, the Vanguard VTI for domestic and VX US for the international.
Yeah, those Vanguard funds are keep you well
Yeah.
covered, right? Whether it's domestically or
Yeah,
international.
you're
Just
covering, I mean, you're covering the whole
do
market.
for those
Yeah.
listening, do your own research on those and pick one because there's
Yes.
tons of them. They're traded on the TSX, they're traded on the FTSE in London, they're traded on New York. So and I'm sure they're probably traded in Australia too. So no matter where you're listening, you can find a Vanguard fund that
Yeah, and I
works
think
for you.
if Vanguard's sort of, to your point, Dave, not available or not applicable, I always say you want to look at, and this is where it gets difficult, right? When you start handling, like, there's tons of index funds, right? You want to make
Yeah.
sure you're looking at, what's the coverage, like what am I really getting, right? Is it the S&P 500 in the U.S., right? Is it the total U.S. market? There's some international funds that only include developed countries, right? There's some international funds that include emerging markets. So you want to make sure you know what it is from a coverage perspective you're getting. And the other piece that I think is critical is you want to know what the expenses are, right? Like, these are not
Yeah.
all built the same. Vanguard funds tend to be on the cheap side, but BlackRock ETFs are usually fairly reasonable, at least the index side. Fidelity has a fair amount of mutual funds, some of which are free if you're a Fidelity customer. So again, I think those are the two things you want to make sure if you're going in the index route. Everyone always says buy this on X, like buy VOO and just forget about it. So, well, you want to make sure you know what you're getting, right? Do you really want to just be in the S&P 500? Do you want a broader total market fund? Do you want developed and international, if you want international at all? And then what are the costs associated with that?
Okay, for those people in the comments, direct all the hate at Kevin for not owning SEHD and VOO.
I'll take that hit.
um, I kind of want to go back to your point about Japan, and you've sort of kind of compared it to the US. And here's my point, I guess, with the US market is there just so many incredibly strong companies, and the list is endless. And obviously the top of that list or the list that everybody says you've got your Coca-Colas, Pepsis, McDonald's, Walmart's, Costco's, Home Depot, Lowe's, and the list literally just goes on and on and on and on, right? Dividend kings, dividend aristocrats, and you've got so many strong companies in the United States of America. I do not see, and again, I can't predict the future, but I can't see that what you described happening in Japan of years and years or decades of negative returns. I just see way too many strong companies in the US. And obviously those companies, they're US based, but they're global. Like we have obviously here in Canada, we have Home Depots and Lowe's and McDonald's and Walmart and Costco and everything else that I just listed, Coca-Cola and Pepsi. So I guess that's my point is those American companies are sure they're based in the US, but I guess they're global companies, or not guess, they definitely are global companies. And so maybe does that insulate them more than what happened to those
Yeah,
Japanese
and and
companies?
and and Dave, to your point, I don't see that. Like, again, to your point, no one has a crystal ball, right? I don't see that happening in the U.S. But I don't think anyone ever sees anything happening before it happens, right?
Yeah,
So I don't see that. Again, if I honestly thought that was going to happen, I wouldn't have 50% of my stock investment in the U.S., right? So I don't foresee that happening. But you just never know, right? And you never know what goes back to whether it's individual companies or countries. You never know who's going to be, the dominant player. Right, you go back to like Ray Dalio's book on his principles, right? Like he predicting almost the fall of the United States altogether as a superpower, and that's exaggerating a bit of his point, but that's sort of where I
yeah,
don't foresee that happening. But he, Ray makes some fair points in the book, so you just never know. But I think sometimes, to your
yeah.
point, I think because one of the greatness of the companies that are here, and two, because we're in the United States, I think folks just tend to be 100% in the United States, right? And that's just where and especially when you think about the last 2 decades, right? The returns have been staggering, minus maybe the last year or so. But the return,
And maybe that
yes,
2008,
yes,
09
yeah,
financial
which
crisis,
was,
but
yeah, Absolutely.
you get those
Yes.
blips on you, of course, you get those ups and downs in the stock market, but like you said, overall, the past 2 decades, basically those years, 08, 09, and that COVID
Yeah.
crash kinda just presented some great
Yes.
buying opportunities
Yes, and
more
like,
than
yeah, to
anything.
your point, the COVID crash was like a blip in the grand scheme of things. I mean, it
Yeah.
felt like the end of the world, and it was like a quarter, and it was over. So
Yeah,
that's
yeah.
that. You just never know, right? I do think that, and what I see is a lot of folks are sort of 100%, if more close to it, in their home country, right? And it doesn't mean you should be 50-50. It doesn't, it's all personal, right? But I just think you don't want that much exposure to a single location, even if it historically has been one of the greatest locations to invest your money. Doesn't mean it will be for the next 40 years.
Right. Yeah, I know that I'm way too invested just in the Canadian market, and I guess sort of my thought process or my reasoning is, well, the Canadian banks have exposure, like Bank of Nova Scotia has a lot of exposure in Latin America or Central America, and I believe in South America as well. I know TD has a lot of exposure in the US, and so there's the global markets, within the Canadian banks, but at the end of the day, I'm still investing in Canadian companies. So yeah, definitely something for me to, to think about, to your point of like, hey, get out of your own
Yeah, and
backyard.
I'm gonna butcher the title. There's a good book. The End of the World is Just the Beginning, I believe. Not a finance book. I read my fair share of finance books. This one's not a finance book, but it goes through sort of the history of globalization, and it just talks about the sort of what if scenario, if you will, of folks starting to shut down the borders, right, and becoming a little more insular, where there's less globalization.
Which we saw
Yes.
it through
Yeah,
through COVID,
less
right?
free
The
trade. Yes,
borders got
absolutely.
shut
Yeah,
down,
less free
and
trade. You think about everything going on in the war in Ukraine, right? And does China get involved? And does that break? So there's so many different pieces. And again, the book's an interesting read. It doesn't mean that's what's going to play out, right? But that's the piece where, and to your point, Dave, I think a lot of folks have that same. It's like the Warren Buffett mindset. Like you don't need to invest in internationally because McDonald's is international, right? And Coke is international. But
right,
what if those borders start to close up a bit, or that becomes a little bit more difficult, right? Especially a huge market like China, right? What if China is like, we're not having American companies here? We've seen it a bit with Apple, and then manufacturing and some of the problems they're dealing with. So it's one of those, you could be sort of have I'll say your domestic companies, right? Whether Canada, US, et cetera, that are global behemoths, McDonald's and Coke, et cetera. And then
hmm
soon they're not, or soon those borders start to shut down a bit. And so yeah, just something that you want to definitely be aware of. Doesn't mean it's going to happen. Doesn't mean it's going to play out, right? But I don't know. I listen. I
yeah,
manage risk for a living for too long.
yeah, definitely something to ponder. And I think that's a great thought analysis of Blockbuster, but I I don't think anyone listening or watching this episode would say, well, Coca-Cola or McDonald's or Home Depot or Costco is in the position that Blockbuster was. What happened to Blockbuster was a disruptor came along, Netflix, and they disrupted the entire industry, and Blockbuster did not pay attention to the disruption
You know,
at all. And I think it's extremely hard. It's nearly impossible for, obviously there's other fast food companies, tons of them, and there's other soft drink companies, tons of them. But are they going to innovate something that disrupts McDonald's and Coca Cola to the point that they become the next Blockbuster?
yeah, and
Not in
yeah,
our
no,
lifetime, right?
and Dave, I'm with you there. Where I think, and I'll just use McDonald's as the example, right? Is it something else, right? So to your point, the Blockbuster example, right, there's a disruptor, right? So Netflix comes in, streaming starts, right, and they didn't see it coming, and they didn't move fast enough. So yeah, totally. But companies come and go for different reasons, too, right? You think about like
Yeah,
Enron. I mean, Enron was here. Enron was a huge company, and fraud brought Enron down. It was a house of cards, right? And so there's a bunch of different ways that companies sort of play out, in terms of how they come and go. But it happens. Again, go to America Online. Like they were so far ahead of it. Go to MySpace. Think about
yeah,
all the money that we're spending on Twitter, for our blue check marks. And you think about a company like MySpace that was ahead of this whole thing. Well, Dave, I don't know about you. I don't have a MySpace account. All right. So yeah, no,
I
I
never
never did
had one.
either. So yeah, trust me, X is my first social media account. I don't spend a lot of time on social media, but it just here are other examples, right, of companies that were ahead of it. and different things happen. And to your point, yeah, I don't. Again, I go back to Google. I do not foresee a world where Google is not a huge player across the board. Like they have their tentacles in so
Yeah.
many different things. But I don't know, and I think you could probably find a podcast if the, or a radio show from 20, 30 years ago where someone was talking about what GE or some other company and saying they're always going to be here, and then they're not.
Yeah.
And so I think it's always you just never know what's around that corner or what's going to ultimately bring it down, whether it's a true disruptor, like a Netflix to your point, whether it's a fraud incident like an Enron, where it's a house of cards, or whether it's just something else. What customer tastes change, right? Folks are like, we're not going to eat at McDonald's anymore, right? We're if we want to go with a healthier option, if McDonald's doesn't sort of change or pivot fast enough, and maybe that's the change. I don't know. And maybe they're here forever and they're twice as big in 10 years. But that's why I don't pick individual stocks. I
Because you
don't
don't
know.
know. I love it. I think you do still sometimes occasionally see an email address that ends in at AOL.com. And it's like it cracks you up, right? You're like, really, this person still has an AOL email address? Like,
I feel the same way about when I see Hotmail addresses occasionally.
yeah, yeah. Oh wow. I want we talked about Walk You to Wealth. I'm gonna bring it up here, your website, which I will obviously link in the description. But yeah, let's just there's the about me part, which we've kind of already went through, but yeah, anything you want to say about your website here and subscribe to the
Yeah, I
newsletter,
think
sign up.
so definitely for folks, they can subscribe to the newsletter, just a free weekly newsletter, sort of my thoughts on everything personal finance related. This week my thoughts were about the US Open primarily because that's what I was watching. So I tied that my mind ties anything to wealth and personal finance at this point in my life. So yeah, subscribe to the newsletter, definitely. It's free. And I think for folks that are, want to buy the book, they can sort of link here and just get to
Yeah, the buy the
Amazon,
book link is
where
right
again
here
they
at
can
the
buy it.
top.
Yep. Yep. And they could buy it,
Online
at Amazon or
courses,
wherever it's
schedule a
sold.
meeting,
Yep. Online course.
services.
And then for individuals, this is a way for individuals that, going back to where I think, I don't want to say where we started because we got on our crypto side path, but
Yeah,
where we almost started about, making financial planning a bit more accessible for people, right? That's my goal. Like I want to make this as affordable and as easy and as simple as possible. There are no sort of hidden charges. Prices are on the site. I don't, as I said during one of my interview at Coinbase, one of my interviews at Coinbase that I had before they hired me, I told them I didn't know how to hide an agenda, which is absolutely true. So what you see is what you get, and this is just trying to make the experience a bit easier. I think sometimes that's what makes people nervous. We're sort of like, well, how much does this cost, and how am I going to get charged? And everything's here. And so I tried to make it as accessible as easy. So for folks that are looking for financial coaching, education, financial planning, that's what I do. And so they can certainly find it on the site.
and right here, a certified financial planner. So, and a certified public accountant, personal finance specialist. So basically, you are qualified to give financial advice.
Yes, and that's a great. If I can give a sort of a public service announcement, I would say that be cautious for folks that are looking for someone to work with, especially in the. So I work in the financial coaching realm. There are no regulations around who can call themselves a financial coach. And so you wanna be cautious on just who you're working with, right? Like what are their certifications? What's their background? Certainly, a certified financial planner is sort of at least the gold standard in the United States in terms of from a financial planning and coaching advice perspective. But again, anyone can call themselves, and we see this on X a fair amount. Anyone can call themselves a financial coach. Anyone can give out advice that then they say in their tweets is not advice. So you want to definitely
Yeah.
make sure you're working with someone who's qualified.
And that's exactly what I was going to say here. Everything I have said here on the Passive Income Podcast is not financial advice. But apparently, everything Kevin has said is financial advice. Just going to skip over here to at Walk You to Wealth. You can find Kevin on X, the app formerly known as Twitter. And I see you've just went over 1,000 followers. Congrats there. And actually, the link to Walk You to Wealth is here as well. So give Kevin a follow at Walk You to Wealth on the app formerly known as Twitter, now
Dave,
called X.
when will we be able to stop saying that, do you think?
Never. It's like the artist formerly known as Prince, formerly known as a symbol, now again known as Prince. So I guess once they rename it Twitter is when we can call it Twitter again and stop
Yeah,
calling it the app
I'm
formerly
looking
known
forward
as
to it.
Twitter.
Yeah, it's hard with the yeah. Is it a tweet? Is it a post? I just don't. I can't keep up.
Awesome. This has been an absolutely incredible conversation. I've totally enjoyed having you here. Before we sign off, any final thoughts? Anything you'd like to say before? Well, anything you'd like to say before we sign off?
No, just a big thank you to you. So I appreciate you reaching out and having me on. It's been great chatting with you.
Yeah.
It's interesting. I only joined social media just last year when I started Walk You to Wealth, and so it's been an interesting journey. And it's you are the first person that I've actually met from social media. So this is an interesting moment. But I appreciate you
Yeah,
having
it's a
me on.
great dynamic, right?
Yeah,
Again, like
yeah.
I said, I've had well over 100 guests now, plus several live streams, and just getting to talk to people, meet people, putting a face out there, and it's an incredible experience. I absolutely love doing this. And yeah, so I plan on keep on doing it. And speaking of live streams, I'd love to have you back someday on a live stream. Those are a ton of fun where we get a few other people and sort of have a what I like to call sort of a roundtable discussion. The other guests get to kind of talk amongst themselves and ask each other questions, and it's uh, it's a lot of fun as well. So yeah, definitely hope you're able to come back someday for a live stream.
Yeah, reach back out, Dave. I'd be happy to do it. And thank you for having me.
Awesome. Yeah, again, thank you for being here. Thank you so much for spending some of your quality time here on the Passive Income Podcast. Truly appreciate you. And if you're still here, well over 45 minutes later, please be sure to subscribe.